My name is Nick B, and let's get into this week's futures overview, starting with the Forex economic calendar. Monday, no news. Tuesday, no news. Wednesday, 10:30 a.m. We have crude oil inventories and FOMC meeting minutes. Thursday, we have core CPI at 8:30 a.m. and unemployment claims. Friday, we have core PPI at 8:30 a.m. and then the consumer sentiment report at 10. All right, so it's going to be a quiet start to the week or so, and then we're definitely going to start picking up into Wednesday. Okay, so as always, with that said, let's start with ES, and same thing as always. All right, on the daily, looks beautiful, wonderful breakout. The rollover, we retested daily support at the 20-day EMA, which is at 57.20. It held beautifully and on par with the 20-day EMA. We can see that, which is perfectly our previous all-time highs, 57.21 it was. So we had a beautiful retest of that. Now we're bouncing. And on the horizon with ES, I mean, all we can see here is get me above 58.30. You're probably going to see 5900, maybe not into this week, maybe next week, maybe this week, who knows. But it's going to go in increments of 20 as always. 5830, 5840, 5850 is going to be the guide for us in terms of moving higher or lower. If we get a breach of 5850, we have room to head on towards 5860, 5880, 5900. That's going to be that top R. Now, the in-between zone, 5800 and 5820 or so, I want to say. Where am I getting these numbers from? Or 5800 actually, was the all-time high on the daily, where we had a massive squeeze, a massive push off of 5670, which was the rollover support, and it squeezed us as high as 5800. So that became our barrier for a few days until we got over it, got to 5820, 5830 became that baseline. We retraced that entire push down towards 5770. 20-day EMA held as support, and now we're bouncing back up again. 5800 is that baseline. We're slightly below it. If we can get that push above 5800, it's probably going to incentivize we see 5820, 5830, and again above 5830 you got to be long. You're going towards 5840, 5850, and so on. In terms of downside, can't be ignorant to that. There is a bit of sentiment leaning downside more, which I'm the perma bull in me says higher, bullish. But let's take a look at what that could look like. And right away on the daily, we can identify that 57.20, your previous all-time highs. If we get a break or a daily candle close below 57.20, we're probably most likely going to revisit 56.70, the rollover support. Below 56.70, it would make sense that we go for this imaginary gap fill, if you will. It lines up perfectly with our 50-day EMA on the daily, which is 56.28, 56.30 area. And that's as far as downside I'll go. Maybe below 5630, 5600, and then we can look at 5500 even. But that's steep. I mean, I need to see something really, really bad out there, whether it's news, a black swan event, something terrible to spook us down there. Could be Iran, Israel, headlines that could probably sway us. But look at what happened last week with the Iran missile threats. We more or less recovered that spook to the downside. And if I'm not mistaken, I believe VIX is, well, yeah, VIX is below 20 again, so that's pretty calm. Now, a spike above 20 on the VIX, it's not always the most terrible thing, but that is going to incite a little bit of fear selling, and that's probably going to open us up down to supports. But other than that, that's really all I see in terms of upside downside on ES. And we don't really even need to break it down to the 4 hour or 1 hour. It's not going to tell us anything we don't know because of last week's volatility in the range that we were in. The good news is finally broke, finally above it. I would say that the last call for upside was 57.83 intraday. And now if we can retake the midpoint of 5800 psychological support resistance, that's going to boost us up to the lower highs of 58.20, 58.30. And again, you play that breakout upside. Downside on the smaller scale, because we went over, the lows 57.20, which were the previous all-time highs. That breaks, okay, yes, it's a short, down to 56.70 probably. But on the intraday scale, your support really is 57.85, right? Get a move below that, and I'll start looking at where my EMAs are on the 4 hour. We're right on the cusp of 57.67, 50, so 57.70. So below 57.85, I know it's tedious. It's like 5, 10, 15 point increment level support resistance levels, but they matter. Below 57.70, that's probably going to expose us to the base of 57.50. Now, 57.50 last week for the last 3 days was a pretty loony level, if you will. Every time price held above it, we bounced. Every time we spiked below it, we had a bit of a pullback to the support, the bottom line, the baseline support of 57.20. Never breached it though. So the assumption is your last call before we see bottom line support would be at 57.50. All right, enough of ES. Let's take a look at our favorite NQ. All right, same thing. And again, also just really quick before I move on to NQ, we identified everything we needed to know both on the daily and the 4 hour in terms of trend, direction, and even a bit of a what could happen in between. I do want to stress that for me, in terms of trend, get me above 58.30, we're going higher, or get me below 57.20, we're going lower on the week. As long as price is in between here, I mean, the best bet is quick in and out, quick 20, 10, 15 points maybe on ES and in and out. But again, I am leaning towards the fact that we had such a reaction, such a strong NFP. This was a breakout of the intraday's resistance, so I am definitely leaning more towards this week that we just continue pushing towards the highs. All right, on to NQ. Same thing daily, except let me expand this on the 2 year, please. Wonderful. Okay. Bullish, same thing. You take a look at it, you're above all the MAs, right? Let's identify where is the floor on the daily and where were our previous highs, because we are lagging a little bit compared to ES. ES is on the cusp of its breakout of 58.30, which is at the moment equivalent to us seeing 20,540 being the breakout. Um, with that said, let's look at the basics. So I'm gonna go ahead and start with the fact is 20,983 and 17,335. That is the absolute floor we're in. That is the higher highs and the higher lows on the big picture. That is where price said it doesn't want to continue any higher from the point of its highs, and it doesn't want to go any lower. So what that tells me with a certainty is above 20,983, you're going higher. That's a breakout of previous all-time highs. And then below 17,330, it was you're going lower. You're probably going to revisit the previous higher lows of 17,100. Break below that, you'll see 16,674, which were probably the 2021 all-time highs. And then below that, you have 16,366. Okay, but that's very far-fetched because there's a key thing that happened here and is currently unfolding. And let's identify what that was. That was the correction where we started to make lower lows, lower highs, right? This was a secondary trend in the primary trend of this being bullish. So we are still bullish, and what invalidates this downtrend at the moment for now is the fact that we have lower high number one from the bottom end, and then lower high number two at 20,100 more or less. If price can stay above the second lower high, usually it incentivizes for a trend reversal from the downside. So if we can hold 20,100, great. We have this point of interest here, this wick here, the final last call, which last week was the NFP breakout as well of 20,168. We've successfully closed above that very nicely. And if we can continue to hold that as support, we should be on the intraday retracing previous lower highs here until we finally get a breakout. But we're not done yet. Let's we haven't went over the whole picture yet because I just was looking at lower highs, lower lows towards the downtrend. Um, and the fact of the matter is, on the daily, in between the floor that we are in, we began making higher highs and higher lows, and that would be at the point of 20,030. We made our higher high, and then we made a higher low at 18,330. Until we broke below or above the support resistance level, we didn't have direction, and I just want to point out how perfectly this is all lining up for that move to the upside, why I'm leaning so much more to the upside. Again, unless, like I said earlier, we see some kind of terrible news, some black swan event, some geopolitical issues where it really spooks us lower. For now, all the setups, all of the price action that's kind of been grinding itself out over the last few weeks is starting to point to the upside. With that said, we're above the previous higher high, the first higher high that we made. We made a new higher high at 20,540. I'm going to mark that off. And then we made a higher low of 19,800 as of last week. Perfect, perfect. So again, we're above the second lower high, we're above the higher high. All of this is panning out to be bullish. And what I'm doing now is I'm narrowing down what needs to break out to give us trend and direction and what needs to break down. And with everything that we've gone over, we can clean this up a bit because we understand that above 20,983, yes, we're going higher. And how do we identify out to which point? Well, on NQ, on the intraday, I know it likes to move in terms of breakouts, breakdowns, roughly 200, 250 points intraday, upside, downside on a breakout, breakdown. So if and when we break above 20,983, more or less your 21,000 area, a decent target to the upside would be 20,250. And you would target it in increments of 50 points. Every 50 points that NQ manages to clear is more confirmation, at least for me, that we have the momentum and the strength to continue on higher. And you get a squeeze, you get that squeeze. But with that said, let me go ahead and remove this previous higher high because it doesn't matter anymore. Let me remove this here as well. And what I'll keep is the 19,800 and the 20,540 support and resistance because naturally that is the floor we are in between in the now. Just like on ES, the 20-day EMA is our best friend. 19,882 is where that 20-day is. So as long as we manage to hold that area there, we should have enough strength to continue even if we pull back to 20,000 or 19,900, even if we pull back, we should have enough strength to be able to bounce off of those areas and then again continue to attack the lower highs on the intradays. Here's the fact, and I'm going to go ahead and set an alert for myself. Right here. Yeah, that's fine. 1915, 815. And the fact is, if and when we break below 19,800, that is a breakdown, an undeniable breakdown, unless the 1 hour candle manages to retrace itself back above 19.8 and it closes above 19.8. Then, if you are in a short position, it's in your best interest to exit. But off the rip, when you're breaking below 19.8 and you give it that half hour, 20 minutes, maybe even an hour to develop, your next target is the previous higher low of 19,640. It perfectly just so happens on the daily to line up same time with your 50-day EMA. So that would be a very perfect target to the downside. I would put a 50-point stop at 850, and my target, my first TP below 800 is 700. Below 700 is 650. So you have roughly a 2-to-1, a 3-to-1 risk to reward ratio on the breakdown of this floor. That's a beautiful setup there. Something a little more riskier is you come down to 20,000 and you put a bid in for a buy. The problem with that is with such a wide scale range, 700 to 800 points, you have to be prepared to swing it. So in the case of you buying in the areas for a swing at 19,900 to 20,000, your stop loss has to be a minimum of 200, 250 points because your upside potential is from 20,000. Your upside potential is 2-to-1. You're about 500, 600, possibly even 700 points to the upside if you can hold that position for maybe over a week or so. That could work out. But Signal side again, I want to go for the breakouts, breakdowns, the when price is actually moving in between the floors. So we're actually getting that. The next alert I would have is 20,540. One second. Okay. At 20,540, I'd like to be long. A stop loss similar 40, 50 point stop loss because your next target above 20,540 really is 20,600, but you're going for the lower highs of 20,700. Again, that gives you roughly a 2 to 1 or a 3 to 1 risk to reward ratio if you can get a clean cut breakout to the upside. Those are the cleaner type of moves. But at the same time, nobody really wants to sit out of 800 point moves up and down. And that's where kind of the intradays is analysis has to step in. Let's break this down to the 4 hour. Again, the clean cut moves are 540, 500 breaks, you're long, 19,800 breaks, you're short. This here in between, we got to take a closer look and pay attention to the now. What happened and what is happening? From what I understand, as we previously gone over, we were making lower lows, lower highs, lower lows, lower highs, lows until finally we found some footing. We made a lower high that we got above, and our second lower high in this case is really 20,000. I would base it off of the wick. So for me, anywhere from 20,300 to 20,330, that is your second lower high. And if this week on the intraday we can manage to pierce that, you will see 20,400. Above 20,400, price is going to come up on 20,500, 540, and that's a beautiful breakout to the upside. If you go long on a break of 20,330 as the second lower high, where would an appropriate stop be? I would place it probably at 20,290 or 270. And the reason it would be a little bit wide like that is because once we break this down on the 1 hour, you'll see that 270 to 280, roughly that area, was a previous intraday lower high, and it was our target for last week. If NQ managed to get a close above 20,270, you would most definitely see that push to 20,300, 330, probably into this open. But we had a mellow close. We closed at 20,200, and that leaves us with the possibility of us going for a 20,270. It breaks out tonight into Monday. We squeeze above 20,330 and it just goes. Or we kind of chill out here, maybe break below 20,160, lead us back down to 20,100 area, and maybe into Monday morning. We bounce off of that area. The third option, as always, can't be ignorant, is we do nothing. We just kind of hang out in a 100 point range here until we get a little bit more volume, a little more traders wake up, bids and asks come in, and then that gives us direction. We'll see, but at 330, 280, 290, that would be my stop. And you're risking, let's see, 30, 40 points for 100. So that definitely puts you at a 2 to 1 risk reward ratio going long here from the second lower high to the third one. Let me see on the 1 hour. See, on the 1 hour, it's showing me just by the looks of this here, unless we retake 20,250 and then we retake the wick of 20,264, it's very possible we come down to 20,100 one more time, just one more time, dip our toes in the water and bounce off of that area. It would, the what I'm trying to word is it would suck so much if price comes down to 20,100 and it breaks below it, because then that's going to expose us to the game of 20,000, 19,900, 19,800 again, until again we have to wait around for this wild volatility to give us direction. So let's see what we get. Again, now that we are on the 1 hour, why 280 to 290? This lower high right here piqued my interest. If we can get above this hump here of 285, that's going to take us straight to 330. Get us above 330 on the 1 hour, wonderfully. Wonderful. We have our next lower high over here at 20,400. And that's it. That's all she wrote. Upside, downside. I mean, that's kind of, I'm expecting higher into the week, even with FOMC and CPI data, unemployment claims. The labor market is chugging along pretty strongly. So we'll see what the Fed says. We'll see kind of what price decides to do. I say higher. The perma bull in me says higher. And let's see if we can get these lucrative setups to the upside this week. If not, we can always short. With that said, have a great trading week ahead, and I'll catch you on the next one. Cheers.